Hello, friends and neighbors. It's Robert Miner with Dynamic Traders Group here, back after a 3-week kind of vacation hiatus through the holiday period. This first week of January, now I'm back doing some regular updates for the Twitter and YouTube subscribers. They're relatively brief. I focus on one or two markets, specific trade strategies, and even if you don't trade the markets that I talk about, is what you'll learn about time, price, pattern, momentum, multiple time frame trading. You can apply to any market and any time frame. One of the markets I'm going to talk about today and describe because it's got just an ideal trade setup that's immediately available to you the first of next week is the euro. This is I did this Robbins trading contest last couple of years, and last year 2018 had a 70.4% return, number 3 of those that participated in this contest. And this year I'll slip down a little bit, down to 38.9%. We'll just call it 39, 40% in 5th place, but still well into the double digits. Pretty good. I'd always like to have it higher, but I'm probably the only person that does Twitter advisory and updates like this that actually trades successfully. So that's a reason for you to keep coming back and maybe check out our DT reports as well. So let's get started. We're going to look at the euro and another market that's got some great trade setups coming this first of this week. So pay attention and learn. So this is euro, and it's the daily data. I'll just show you a few of the reasons why it was in the ideal position to consider a long trade or even a bull position with an ETF like the FXC today. And I'll show you, we'll get down to intraday data and how I entered the market here about midday today. So this is the daily data again. I won't go into too much detail, but over the last few months, every 5 to 6 days, we've had a reversal in this market. So it's a reversal cycle, not necessarily every one of them just went low, high, low, high, low, high, but every 5 or 6 days, we wanted to be prepared for a reversal. So coming into Thursday, this shows us day 7, and that's because e-signal puts some data into the January 1st as well as December 25th holidays, and those shouldn't have bars for those days because they're not full trading days by any means and not any volume on those days. So really the 6th trading day of the 5 to 6 trading day of active trading would have been Thursday. Well, Thursday we came right down to the target zone to make a daily reversal, and that was 78.6% retracement and the 100% alternate price projection. We're right in the time factors to make a reversal, and our daily momentums were dual look back oversold, but we didn't make a reversal signal by the end of the day on Thursday, but we knew we were at those extremes. So Friday, yesterday, we were in a really an ideal setup to complete a daily low, and that would be followed by a net bull trend for 3 to 5 days. And what did we end up doing on Friday? Well, we made an outside to-close bull reversal day. So definitely by the close, for instance, with our DT alerts recommended with FXC, by the close, if we close today above Thursday's close, that was a go long setup by the close. For intraday and for more leverage positions like the FX position, is what I did today is I just drew a little line early this morning across this little swing high. Now this is real low volume bars in the 240-minute data, but it was where for 3 to 4 bars we were kind of sideways before we made this dip down to a new low. And so I put my buy stop to get long above this little swing high with a stop below this low. So real small capital exposure for the potential of 3 to 5 days net advance. So a great setup today during the day, whether you're leveraged or on the close, whether you're not leveraged. What we're looking at is if we make a daily close above the January 3rd close, this is probably the end of an ABC correction and will continue to a new high. Well, I'm not forecasting that that's going to happen. I'm just looking for a daily trend, and that's a 3 to 5 day trend, sideways to up, and that'll just be a real bonus if it happens to close above that. Then I'll probably end up holding on to this trade for a couple, 3 weeks. We'll see. For now, good trade on the long side, minimal capital exposure. And keep in mind, if you're listening to this over the weekend, this is only the first bar, the first day of this low. So you got a lot of opportunity here on Monday to get into this trade on the long side. Okay, let's take a look at one more market. I know you're going to be interested in the gold market. So this is gold weekly data, and this past week we reached the end of wave 5 price target zone, which begins at the 127% external retracement of wave 4. Is that the end of this 5-wave advance beginning back in August 2018? We've reached the price relationship. Our weekly momentums are overbought, and that usually means we're within a week or two of making a weekly high. Well, as I've advised our subscribers, probably not. We're probably at a weekly high. That's a high that's going to last at least 2 to 3 weeks, but the decline should be a correction within the bull trend. Why is this not the end of wave 5? We haven't reached the time target for an end of wave 5. So again, we're probably going to make a correction for 2 or 3 weeks. Followed by a resumption of the bull trend to a new high. Now, my advice has been to our Trade Alert subscribers that once we hit this end of wave 5 target, this again is not the degree of wave 5 that we're looking for. This is probably just a wave 1 of 5. Once we hit that, is we did cover the long positions that we had taken all the way back down here, because more than likely we're making a weekly high. So we're looking over the next 2 or 3 weeks, anywhere from a few days to a week or two, to identify a corrective decline, which will give us another opportunity to enter on the long side. Here's another reason why I think that even if we complete a weekly high now, is that more than likely it's not the end of the higher time frame bull trend. This is silver weekly, and as you can see, silver just traded above the wave B of 4 high, that swing high, traded above it, didn't close above the closing high of the wave B, but we haven't even exceeded the September wave 3 high in silver. Neither have we in the GDX. That's another reason why even if we make a weekly high now, is I think we're going to be sideways to down in a corrective decline, and then eventually we're going to continue in this bull trend, which should extend into at least March. So that's what we're looking at for the precious metals and the mining stocks. Well, that's it for today. I hope if you like what you learn in these updates, that you check out our DT reports at dynamictraders.com. And I'm back. Should have one of these updates once or twice a week from now on for our Twitter and YouTube subscribers. So take care. Have a fantastic week.